Sweet. All right. What is going on, everybody? Welcome back to another advanced video. I am your host, Mason Peters, and today we're going to be talking about some commodities. My favorite commodities, oil and gold. I don't trade commodities a whole lot because I just stay away from them because of the global geopolitical events that occur in this world are a little crazy for me to keep up with. So I typically stay away from commodities. But yeah, in this video, we're gonna be going over gold. We're gonna be going over silver. We're gonna be going over oil. We're gonna be going over a couple other commodities like orange juice. Even wheat. You can trade wheat. But the reason why I put this video in the advanced series is because commodities are a lot different compared to a lot of the other markets that we trade. And I wanted to make sure that it was, it was covered later down the line in your trading, because trading something like gold and silver is a much more different market, and not because of the trading analysis, but because of the fundamental analysis behind trading gold or silver. They are impacted a lot by government decisions, wars, interest rates, a whole lot of other things, seasonality as well. So February, in the month of February, during Valentine's, we should actually see gold do okay for the month of February. So, like I said, just different reasons why I put this in the advanced region. But let's go ahead and hop right into it. So commodities, if you've never heard of commodities, it involves physical goods or raw materials like agricultural products, wheat, corn, soybeans, energy resources such as oil, natural gas, metals, gold, silver, copper, and other tangible items. Among the more common commodities includes gold and oil, like I just talked about, and silver. Those are notated as XAU USD for gold, US oil for oil, and then XAG USD for silver. The commodities market is significantly different compared to indexes, stocks, and currencies, mainly because they are components of foreign trade and human consumption. So, scarcity makes it valuable. And because oil is a monopoly, and it's a resource that we actually don't have unlimited supply of, as a monopoly, you can charge the price of whatever you want for oil. So let's say, and this goes back to supply and demand, by the way. Let's say you have a lot of oil and you're pumping a lot of oil as a country, you have a surplus of oil. To make sure you don't have too much of it in oil tankers and in refineries, you want to sell it at a lower price to increase travel, cars, jets, airplanes, etc., boats, anything you can think of that uses oil and natural gas, right? You want to make prices lower so people utilize the supply. When we have a shortage of oil, we're going to make it more expensive, right? It's going to be way more expensive to purchase gas at the gas station. It's going to be more expensive to take flights. Tickets are going to be more expensive. So commodities play such a massive role inside of the foreign trade market. And, when we're trading these things, if you're going to trade commodities, you better just be really good at doing research on a whole lot of economic developments and political developments that are going on throughout the world. Now, the funny thing about commodities, especially gold and silver, is they're one of the most heavily invested markets because it's a diversified risk inside a portfolio. This means that if you have 100 $1,000 and you want to spread it out across the board and you're an investor, right? And you want to see some returns on your investments, okay? You would probably, and excuse me real quick, allergy season's been going crazy. So if you want to see 5%, 2% returns, and you don't want to see too many swings in your portfolio, right? As an investor, you would have short-term stocks, domestic stocks, mutual funds, bonds, treasury yields, gold and silver, and crypto, and a couple other, short-term, long-term interest rate returning investments. You probably have a little real estate even, if you're an investor, right? And even if you have, let's say $10 million, you would have gold as part of your portfolio because gold historically does very well. And during times of panic and during times of economic hardship, gold will always perform well. So the reason why this is covered in the advanced is, like I said, fundamentally, it is just something that you have to become educated on, very educated on as you move forward as a trader. So let's talk about gold here on the weekly chart. So this is 1982 over here on the very far left side, right? And gold was trading at about $300 in 1986, 1982, right? And it fluctuated between $300 and $500. And at the time, in 1982, that was a lot of money, okay? So you got to think about the price of houses, the price of cars, the price of groceries. At that time, the nominal wage that workers made, was around the price of gold of $300 to $500. And then in 1998 and in 2002, we saw the bottom of gold hit about $250 per gold bar. And ever since then, gold has never looked back. And we can see now that in 2023, gold was trading at 1913, right? And actually, currently, gold's trading higher than that as we speak. But you can see the weekly chart how gold just constantly does well. Why does gold do well? Because it's tangible. It has value. It's physical. The US dollar is not backed by anything but the trust and faith of the US government. Gold is physical. It's tangible. You can hold it in your hand, wear it on your neck, wear it on your wrist. It will always be valuable to people. That is why a ton of investors have it in their portfolio. So the weekly chart of gold just goes to show you how valuable of an asset it is. Why does the gold standard go up and up and up and up? As you see, though, there are very volatile dips in this market. So as a day trader, you got to just be very careful when you're trading gold. But for the most part, you're always going to be looking for buy positions on gold. Silver, very, very similar. Silver, very, very similar asset. As you can see here, the weekly chart has gone up. Silver hit a high of $46 in 1980. That's crazy. $46 per silver bar, silver weight. I forget how they denominate it, to be honest with you, but silver was not trading very well back down here in the early 2000s. But then just like gold in 2004, 2008, it took off. And now if you don't remember, 2008 was the global recession, right? So, gold was taking off at that time. Let's see here. So by the way, I want to show you this. Look at COVID. Look at 2020, right? Look at 2020 on gold. Roughly here, right? Roughly in here, gold was just buying up. Now on silver, right here at the beginning of 2020, it spiked all the way down and then shot up. So a little more volatility on silver than gold. A lot more volatility on silver than there is on gold. So if you're going to trade silver or gold, just be aware of how volatile the pair is. Moving on to oil. So, oil is always in balance. Let's be honest. Oil is always going to be trading between $155 a barrel and always going to be trading between, I'm sorry, let me rephrase. Oil is almost always going to be trading between $26 a barrel and $130 a barrel. Almost every single time you go to buy gas, it's going to be relatively the same price. There are going to be different circumstances which makes the price of oil go up and down. I want you to pay attention to something. Look at what I wrote down on the chart. I apologize, of course, about this as well. The pollen has been, I don't even know. The pollen's crazy here. It's just crazy. Woo! 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 Wow. All right, here we go. Woo! COVID-19. Never have we ever seen anything like that before. $0 a barrel oil hit. $0 a barrel. That's crazy. That is crazy. I don't know if you guys remember, for an entire week, we were not doing anything. Everybody was shut down for an entire week because of a virus. Whatever, right? Whatever. It's fucking shit. Whatever you believe in, whatever. Nobody was traveling. The entire world shut down for an entire week. So for an entire week, nobody traveled. Nobody took an airplane. Nobody was on a boat. Nobody was on a jet. Nobody was driving their car. No one was pumping gas. Oil hit $0. You know how wild that is? Like, life stopped. Literally, life stopped for a week. The birds came back out, the deer, the whales, like, just because of a week of human beings not being human beings, the wildlife came back out, the smoke cleared from the air. It was just unbelievable, right? An insane time in our world. Oil hit zero because of supply and demand. Nobody was demanding oil. Nobody was going anywhere. So what happens if there's no demand? Prices drop. Prices drop. It rebounded very quickly though. Why? Because when we started coming out of COVID and people started doing things again, the price of oil went up because then there was so much demand for oil. The price went all the way from 26 back up to 100 and almost $30 a barrel, right? Currently, I think oil is trading at $71 a barrel. So put it into perspective. If oil is trading at, depending on what state you live in or what country you live in, different taxes and bullshit. If oil is trading at about $88 a barrel, that's probably about $3.50 a gallon, depending on the state. If it's trading at $71 a barrel, oil, you're gonna probably pump gas at the gas station for like $2.94, something like that. So it's minimal, right? But usually, like, it's expensive. Above $80 a barrel is a little more expensive, and anything under 80 is pretty fair price for gas. So anyway, not to stay too long on this, and my allergies are killing me. The oil chart to trade oil, and by the way, the way that the price is denominated and counted and value is different from other charts. So gold, silver, oil, the pips, right? The measurement that we use is very different on each commodity. So we're about to go over that. So on gold from 1,920 to 1,930 is 100 pips. That's 100 pips, guys. So we're talking 100 pip move on Forex, right? We're talking 100 pips on gold. This is the 15-minute chart. So, I mean, it went boom, 100 pips here, boom, 100 pips here, boom, 100 pips here. And that's on the 15-minute, you know what I mean? So it's going 100 pips per session. And of course, it depends on the volatility and the season and blah, 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 right? But it makes it a great pair to trade as long as you have plenty of experience. That's all I have to say about gold. As long as you have experience, as long as you are practicing your strategy on a demo account or on a funded account, or you're taking very small risks, I think gold is a very, 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 very valuable market to trade. Okay. So let's go over again the market of commodities, okay, impacted by geopolitical events, politics, and supply and demand. One of the biggest impacts the commodities market ever saw was during COVID-19, March of 2020, right? We went over that. Okay, there was too much supply. There was too much supply of oil, which made it go to zero. This caused the price of oil to drop. Professionals that know the law of economics took advantage and bought oil contracts knowing it would go back up in price. I guarantee you there were millionaires created off of COVID. Like all of us are just hanging out, right? There were investors that like saw the price of oil go all the way to zero and they bought so many contracts and probably made millions of dollars. You know what I mean? So it's always about being prepared, being knowledgeable, right? Being aware of what's going on. I was trading in 2020 during I apologize. I began trading around COVID. I had no idea. I had no idea oil even existed to trade. You know what I mean? So price action within the commodities market varies significantly from currency and index markets. Learning the patterns and behaviors of these markets takes time, but can be profitable if traded correctly. Every trader has a different style, and trading commodities may be a good fit. Here we are on gold. We are sitting at 2035. If I were to trade commodities, all I would do was go on the 1-hour chart and I'd stick to gold mainly. And I would take your areas of supply and areas of demand, and I would just look for positions all day long. All I would do is just look for positions off of these rectangles. That's all I would do every single day. That's it. That's it. That's all I would do. That's all I would do. I don't trade a lot of gold anymore because me and gold don't have a great relationship. And that may be a little biased, right? That may be biased on my end, but I just don't have a great relationship with gold. So, if you want to trade in commodities, if commodities is a market that you like or you are interested in, book a one-on-one and we'll get more in depth on how to really trade some of this shit. The only problem with this is like we're in a balance right now, you know what I mean? Like the market's in a balance, and so during market, like when a market's in balance, it's typically trading in a certain zone, you know what I mean? Like it's trading within one area, whereas you have periods of just trends, straight trends, where you have a massive, massive, massive move to the upside, a retracement, and then another massive move to the upside. So, yeah, right now, I guess we were in a really big uptrend. It went all, I mean, literally, literally in 59 days, like 60 days, 2 months, like 2 months, it went 17%. That's wild. That's so wild. And then over here, and I'm going to go to the 4-hour, over here on gold, right? We were in a downtrend for a while. So gold was just trending downward for a while and finally peaked out and then reversed to the upside. So yeah, if you want to get more into gold and commodities, reach out, book a one-on-one, and we'll get into it. But guys, that's going to go ahead and end the recording. Thank you so much for hopping on, and I hope you guys learned something. I'll see you guys all in the next one. Take care.